This is Craig Haugard with your Financial Issues Ag Update for November 15th. Well, corn continued to rally last week, with the December contract ending the week nearly 25 cents higher. Exports were supportive in Friday's trade, as were exceptionally good ethanol margins. At the close on Friday, we had December futures 7 3/4 cents higher, settling at 5.77 1/4. Soybeans were sharply higher, with soybean meal leading the bean complex upward. Soybean meal posted an $18 per ton gain on Friday. Now, the soybean meal basis has been a pretty hot item lately, with strong demand from Canada as it looks to the U.S. soybean meal to backfill its shortfall in protein due to the drought that nation experienced. The other factor driving soybean meal higher is the cost of lysine. Dry lysine is up over 300% from last year's levels, and that's causing livestock producers to seek it where it can be obtained naturally. And that, of course, is driving demand for soybean meal. At the close on Friday, January soybean futures were 22 3/4 cents higher, finishing at 12.44 1/4. Wheat is a pretty fascinating story right now. Traders continue to sort out the Argentinian GMO wheat situation, and it seems like the default action has been to buy wheat, which is causing a rally in our price and further pricing the U.S. wheat out of the export market. Now, hard red winter wheat is now trading at a $27 per metric ton premium to Russian wheat. Now, this whole situation is only compounded by Russian actions, which is looking at revising their export tariff system as they also try to price some Russian wheat out of the export market. With a shortfall of good quality milling wheat around the world, the path, at least for now, seems to be more to the upside than the downside. At the close, Minneapolis December futures were 3 3/4 cents lower, closing at $10.50 a bushel. Kansas City was a nickel higher on Friday, closing at $8.33, and Chicago futures were up 4.5 cents to close at $8.17 per bushel. Cotton futures had a decent trading range, but ended the week on a softer note. At the close, we had March futures 33 points lower as they settled at 115.08. Livestock values were split. We had February live cattle futures 30 cents lower, closing at $136.10 per hundredweight. January feeder cattle were $1.35 lower, as they settled at $157.72 per hundred. Lean hogs of the February futures were stronger to end the week. They finished up $1.47.5, closing at $80.55 per hundred. Class 3 milk futures sold off sharply as they lost about 2.5% of their value in Friday's trade. At the close, we had December futures 46 points lower, settling at $17.62. Meat cutout values were mixed. Choice box beef ended the day 84 cents lower, closing at $284.30. Select boxes were $2.24 better as they settled out at $269.53. Pork carcass cutout values threaded part of their Thursday's big gains as they finished $1.09 lower, ending the day at $94.71 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.